Today we're talking about the power and the value of future expectations. We have for you 3 examples: Nvidia's rise in recent volatility, Fed Chairman Powell's interest rate comments, and lastly, a little ski town in Italy that gets overrun by tourists. The common thread on these 3 stories is how forward expectations can impact economic activity. First off, chipmaker Nvidia's stock price dropped nearly 17% on Monday to prices not seen since, wait for it, last October. The decline was related to news of Chinese artificial intelligence startup company DeepSeek developing a new AI model. The semiconductor industry has been changing dramatically. Over the last 2 years, Nvidia has become one of the largest companies in the world, adding $2.4 trillion of market value. This was a 500% stock price increase. The types of companies in this industry are built largely on future expectations, and some of the expectations changed this week. Next up, the U.S. Central Bank just wrapped up its latest FOMC meeting, deciding to keep short-term interest rates unchanged. As of January 30th, the effective federal funds rate stands at 4.33%. No surprises here. Markets saw it coming. But if Powell had thrown a curveball like a surprise hike or cut, you could be watching the markets do somersaults. In our last story, more than 10,000 tourists recently flooded a small Italian ski resort after a TikTok influencer hyped it up online. 200 tour buses jammed the roads. A sudden surge in demand driven by new information like a viral TikTok can instantly shift economic value. In the digital age, virality isn't just about views, it's an economic force. The power of future expectations is undeniable. Whether it's Nvidia's stock swings, the Fed's rate decisions, or a ski town overwhelmed by TikTok tourists, new information can instantly shift economic value. Anticipation drives markets, influences consumer behavior, and can send entire industries into a frenzy. But just like a pendulum, expectations don't move in one direction forever. What surges can just as easily swing back. What's clear? The economic landscape isn't just shaped by what's happening now. It's defined by what people expect to happen next. And when expectations shift, so does everything else.
Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment